Hello everyone. Today we'll be doing a monthly review, discussing what we expect until the end of June. The review will most likely be available on our YouTube channel, so make sure to like, subscribe, and of course leave your comments. This is very important for us to understand that the content is useful. So today, Iran has finally announced that it is withdrawing from certain negotiations, and the market's reaction was immediate. We immediately saw a drop, then a rise. The data from the manufacturing sector showed a solid increase. This applies to services, manufacturing, and prices. However, the data on prices came out weaker than expected. Of the important things, tomorrow we will have the number of job openings for April. The data is expected to be better than the previous key macroeconomic indicators. If the data turns out to be poor, we will see a further drop and continued decline. Thursday, Friday. Average hourly wage, non-farm payrolls, unemployment rate. So far, the new chair of the Federal Reserve has not yet said what they will be focusing on, what they will be guided by, because the previous chair, Jerome Powell, focused on the unemployment rate. We'll see what the new heads will be guided by going forward. GDP for the first quarter will be released on Monday. CP, and the most important macro indicator, one way or another, the Federal Reserve is obliged to pay attention to this data. That's the CPI, the Consumer Price Index, which will be published on Wednesday, 10th June. The data is expected to be at the level, no, there is no forecast yet. There are previous figures, 3.8%. Then on Thursday, we'll have the following: the euro deposit rate, the interest rate, the euro, and the producer price index. Sometimes, by the way, macroeconomists consider this index to be much more important. Compared to the consumer price index, the producer price index is actually much more significant. Why is that considered to be the case? But as it happens, the main indicator is still consumer inflation, which will come out later. For the UK and the European Union, on Wednesday, 17th January, the interest rate and the euro will be released on 17th January. We'll get to that in a moment. And basically, that's it until the end of June. Oh, I said January, I mean June. Until the end of June. Basically, that's all. There's nothing else important. Here, I selected custom DSD for the 30th, and we can see from the 19th onwards there's nothing more. So far, there are no key indicators. It's clear that nothing is likely to appear, but for now, no changes to the rate are expected. For this month and next month, the rate's expected to remain at the current level for liquidity. By the way, we looked at the monthly and weekly charts. By the way, the weekly chart overlaps the lower block. Apparently, it's already reached the level. We looked at the review together this morning and talked about this level. We've just reached this level. Although, as for liquidations so far, by the way, what's the situation with liquidations? 535 million. Well, not bad so far. So far, not bad. 400 million from long traders. Yes. So spot purchases here haven't been successful. For now, the price continues to move downwards, so there isn't yet a level from which it will bounce. Right, I'll finish the review now, and after that we'll move on to live trading, just so our logic is clear. USDT dominance, we're expecting some further upward movement towards 9%. It's possible we might see a double top form, and only then should we expect some downward movement. But with a high probability, I still expect the decline to continue. By the way, I need to connect the indicators. I want to have a look at what the indicators are showing. Well, yes, it's still in an uptrend for now. At the moment, there are no sell signals, so for now, we're still expecting USDT to continue rising. That was the monthly time frame. The weekly time frame is also still in an uptrend for now. There was only one sell signal out of 6, so for now, we're still expecting USDT to continue moving upwards. The daily time frame is also showing a green vector. I will be expecting the movement to continue towards around 84 to 88%. For now, there are no changes here either, and we can also see this on the 4-hour chart. It is showing a long signal ready to keep growing, including with the dates. We know, of course, that if this is rising, then the market in general is falling. So for now, the signal here is a signal for growth. Total. Let's go through the data. Total, let's have a closer look at the monthly candle. It's a heavy monthly candle. It broke through the support of the previous month's candle. Sorry, this one here, we need to analyze this monthly candle. We have removed liquidity above $2.7 trillion pulled back, then continued further down, unable to hold above the level. The new candle opens below the support level. Breaking through the support, yes, this really gives the sellers a strong advantage. In fact, the previous weekly candle also closed in the red. We've finally broken out of the range. We had a range. The previous position was inside the previous week's range, but now we've finally broken downwards. Yes, and this also breaks through yet another previous candle. If we look at the weekly chart, even the daily candle's being sold off completely. The sell signal actually came in as early as 20th May, and since then it hasn't really changed. It continues to fall, with the target more or less clearly at 2 and 3, but also with the removal of liquidity, $2 and $2 trillion across all coins and the cryptocurrency market as a whole. Yes, if we're talking about altcoins, and if we're talking about altcoins that are looking a bit stronger than the whole market, in other words, not just Bitcoin, Ethereum's being sold off quite heavily, while some altcoins are looking a bit better. Yes, we even saw some growth here. There was even some hope for an upward movement. That was the month before last and the previous month. They were more or less decent, showing growth. Then, the previous week wasn't interesting, trading within the same range as the month before last, the month before that, and even earlier. Basically, since the beginning of May, we've been in this sideways movement between $738 billion and $760 billion. Roughly speaking, that's the kind of choppy movement we've had. There was a strong surge, it was sold off, and then we just entered a sideways trend. We're still in this sideways market. Support at $740 billion was broken, prices dipped further, but then held and returned to the sideways range. So, unfortunately, everything is looking rather dull here. On the daily time frame, there were sell signals on the 28th of May, and for now, the sell position is still holding. Therefore, if it continues to fall, $700 billion is the first target, and the second is a liquidity sweep below $680 billion. Looking at dominance, we can see that 13 is falling, but the thing here is that the flow from Bitcoin isn't going into alts, it's actually moving from Bitcoin into USDT. Mainly, the alts haven't grown much, but Bitcoin is the one that's showing this morning movement. Today's review is about what we discussed earlier. I'll be trading on the decline with stop losses set above the highs. The target is around $70,000. So I'll keep watching this movement further. We still haven't properly tested the buyer's block, which is somewhere around 67,700, and then there's 70,566 and 700. This is the buyer's block. As for Ethereum, again, the monthly signal is for selling, the weekly signal is still for selling and hasn't flipped to long yet, and the daily sell signal has been in place since the 16th of May. It hasn't flipped to long yet either. I also shared the idea that I'll be trading short on Ethereum, all the way down to $1,850. As for the coins, it's the same story with Solana. My target is $72. There's also this global buyer's block at 74 to 67, but my target is somewhere around the middle of all that at $82. I'll be watching in that direction. Why? Because what happened here? We've traded below all the moving averages on the sell side, so most likely we'll continue moving downwards. So, I saw that Edward is planning to short it. The nearest buyer zone looks to be at 82 cents. In fact, it's set up for a continued short because it's very sluggish. There's a lot of negative news about it. The network keeps going down. So for now, the strong seller blocks are at $1.60, 92 cents, and 88 cents. And there was heavy selling throughout this entire period. By the way, the first sales on the hype came in at around $75. If it's 4.5, if it does correct, then the first collection zone should be at $65. It's certainly difficult to trade. To be honest, you need to be a bit more careful with it. You need some sort of clearer structure, even for on the indicator 1, 2, 3, 4, although there have already been 5 signals and 7 to sell. So here. You can even watch its movement, so to speak. If you have any questions, do ask. If not, then this recording, I'll stop and start a new recording, live trading, and we'll continue moving forward.